The UK tax system is a robust and efficient machine that ensures our government maximises its tax revenues in order to meet its public expenditure obligations. But how does this system actually work? And how does it work for you employees out there who pay income tax and national insurance through the PAYE system, that is pay as you earn? In this video, I'm going to cover why do we pay taxes, some of the different types of taxes here in the UK, who actually decides how much tax we all pay, an introduction to income tax and PAYE, and finally how income tax and national insurance is worked out on a typical PAYE payslip. Before I get into today's video, be sure to hit that like button and subscribe if you've not already done so. This really does help us to get our content out there and enables us to produce more good quality content for you. It's a hotly contested debate amongst us all, no doubt. Why should we, and ultimately why do we pay taxes, and in the case of the UK, national insurance across to our government? Whether you are here in the UK, the US, or most countries across the world, there are always some form of taxes you will pay. Now, I'm not going to engage in the moral arguments for and against paying taxes, but rather provide an insight into how the tax system here in the UK works, focusing on PAYE, that is pay as you earn employees, and where does your tax money actually go. Most governments collect tax receipts in order to spend on what is known as public expenditure, as well as pay interest on our country's national debt. In 2019-20, according to the UK government figures, tax receipts were spent as follows. For every £1 you paid in tax, 22.1 pence was spent on welfare. This is social protection by way of housing benefit, unemployment benefits, and other social security payments. 20.5% was spent on the health service, namely the NHS here in the UK. 12.4 pence was on state pensions. This is the pension the government pays across to you when you hit the state pensionable age, currently 67 for most of us. And for this particular expenditure, it is supported by what is known as national insurance contributions. 11.6 pence on education, and well, I think you get the gist of it. You can access this PESA government list by clicking on the link in the description box below. So if you think a little deeper about taxation, is it a levy worth paying to live in a society where you know you will get your garbage collected regularly, you get healthcare when needed, you can rely on law and order enforcement, your kids will get an education, and if you hit troubled times, there is a social security safety net by way of welfare? Or do you feel a complete capitalist system where everything is private with little or no government intervention is better, where you pay no taxes but you arrange and pay for everything from healthcare to education yourself? Or maybe something in between? Leave your thoughts in comments below. I'd be intrigued to know how you feel. So who or what powers actually decides how much and when we pay our taxes? Well, here in the UK, it all starts with the annual budget proposals put forward by the Chancellor of the Exchequer of the time. The budget is a yearly event, and at least here in the UK, it gets a lot of media attention. These proposals are presented to the UK Parliament, and unless objections are raised, become an Act of Parliament, also known as statutes, which are then wrapped into the Finance Act of the year. Follow so far? For income tax PAYE, the following relevant statutes are currently in place at the time of this video launch. The Income Tax 2007 Act, also known as ITA 2007, the Income Tax Act of 2003 for earnings and pensions, known as ITEPA 2003, and the Tax Management Act of 1970, known as TMA 1970. HMRC, that is Her Majesty's Revenue and Customs, are the tax authority here in the UK. They issue a variety of statements, such as a statement of practice that explains how the relevant statutes, remember these Acts of Parliament, are implemented in practice. These statements explain how HMRC will interpret tax laws and will be adhered to unless challenged successfully in the UK courts. And this is where it gets a little bit tricky. Tax law is complex, and over the years, taxpayers and their tax advisors have often disagreed with HMRC over the interpretation of certain tax acts. Of course, HMRC's objective is to maximise tax revenue collected, and not always, but more often than not, your objective as an individual company is to minimise the amount of tax you pay. Now, can you see why disagreements and disputes arise? As a result, it is then up to the UK courts to provide ultimate judgment under what is known as case law, and it is the judgments in these case laws that can ultimately determine some of our tax bills. One very prominent case that probably has had an impact on many small businesses is the Garnet versus Joan Arctic Systems Limited case, which you can read a 1-minute summary of by clicking on the link in the description box below. Because of the bravery of Mr. and Mrs. Jones in challenging HMRC, their case was upheld by the House of Lords here in the UK and set a case law precedent for perhaps millions of taxpayers who benefited from what they fought for. That is the income shifting rules. Income tax and national insurance makes up approximately half of the total tax receipts for the UK government at least. So it is a significant tax that impacts most of you. Your income tax and NI bill is based on the UK tax year. That is from the 6th of April to the 5th of April every year. But who exactly is liable to income tax and national insurance? Essentially, if you are an individual who is tax resident here in the UK for a tax year, then you are generally chargeable to income tax on all of your income arising in the UK and any income arising overseas too. But there are some exceptions and treaties that need to be taken into consideration, but that's for another video and at another time. You become what is known in tax terminology as a taxable person, but there are many different types of income that fall under the income tax statutes. There is employment income, pension income, social security income, trading income, property income, interest income, dividend income, and other miscellaneous income that are all subject to income tax rules. But what I'm going to focus on in this video is employment income that is determined by the statute ITE PA 2003, which also covers pensions income and social security income. And it is administered by what is known as the PAYE, that is the pay-as-you-earn system. The income tax and national insurance system is classed as a progressive tax system, a system that attempts to distribute wealth more evenly across our society here in the UK. Basically, your tax burden only increases as your earnings increase, so the more you earn, the more you pay, and vice versa. The opposite of a progressive system is a regressive system. An example of a regressive tax system is perhaps council tax here in the UK, as it is not based on your income. Say you are earning £50,000 per annum and lived in the same street as someone who earned £30,000 per annum, and their council tax band was the same as yours, let's say £1,000 per year. Your neighbour would end up paying a larger proportion of their income towards council tax than you, but yet get exactly the same benefits. Let me know in the comments below if you think that's fair or not. As always, this part is best explained with an example. Meet Ricky, who is a UK tax resident. Look how excited Ricky is about being employed in the oil and gas industry as a PAYE employee. He has a formal employment contract and his basic salary is £75,000 per annum and has a tax code 1257L for the 21-22 tax year. Let's calculate Ricky's tax and national insurance bill for the year. Employment income is £75,000. He has no other sources of income, so total income is also £75,000 for the year. His personal allowance of £12,570 in the 21-22 tax year is deducted. This is the amount Ricky can earn in the current tax year, completely tax-free. This personal allowance is available to you as a UK tax resident, although there are some situations where it is limited and even reduced if you earn over a certain amount. Some non-UK tax residents are eligible for the personal allowance too. Now for the income tax calculation. For amounts between £12,571 and £50,270 on an annualised basis, 20% basic rate tax is applied. So that amounts to £7,540 for the year or £628 for the month. Then for the amounts between £50,271 and £75,000, remember this is Ricky's annual salary, 40% higher rate tax is applied. That amounts to £9,892 per annum or £824 per month. So that provides a total tax-borne figure for the year of £17,431 or £1,452 per calendar month. Let's see what Ricky has to say about his tax bill so far. And now for the national insurance payments. All PAYE employees here in the UK are subject to Class 1 Employees National Insurance, and it is worked out as follows. The first £9,564 of gross annual salary is actually exempt. Then between £9,564 and £50,268 national insurance is levied at 12%, so in this case £407 per month. And finally, any amount above £50,269 is levied at 2%, so £41 per month. Total Class 1 primary national insurance payable is £448 per month. This example is provided to show you how a basic income tax and national insurance calculation is computed. And what's more, HMRC provide a useful calculator where you can get an estimate of your tax and national insurance liability in the 21-22 tax year for your own specific circumstances. For Ricky's example, let's go through their calculator, which you can access by clicking on the link in the description box below. Firstly, enter your monthly basic salary. For Ricky, it is £75,000 per year. So that works out to be £75,000 divided by 12, which is 6,250 gross per month. Let's assume Ricky is 48 years old, so he's under the state pension age, which is currently 67 here in the UK for most of you. The standard tax code here in the UK will be 1257L for the 21-22 tax year. So let's put this in. If you want to find out your tax code, you should be able to get this from your last payslip. And then get your results. Click on the monthly tab, and you will see the amount of income tax and national insurance is the same as our calculation for Ricky, with some small rounding differences.